Thanks so much for tuning into the trade setup. I'm Neeraj Shah. Good morning, and it's a curious day of trade, and I'll tell you why. First, the key newsmakers in amongst the globe. What adds to the uncertainty, if you will, is that NATO is now firmly getting ready to oppose any kind of Russian moves. I think in some fashion there is a bit of a response. So if you look at the key newsmakers today, in some fashion there is a response that has come in from NATO, and the US as well, by the way, which is saying that they will amass some troops and some activity near the Ukrainian border in a bid to deter a new Russian invasion. So that is part one. Morgan Stanley said winter is here for stocks. They have borrowed again from Game of Thrones, but this is, of course, the Morgan Stanley US strategy team, and I'll give you an inkling of what they're saying a bit later on. And apparently, US may be forced to react in the US-China trade deal issues. Remember, a couple of years ago, the US-China trade deal was the biggest thing for world markets as to how it will hope happen. And once the deal was signed, there was some particular quantum of goods that each country had to buy from the other. And China apparently is way behind when it comes to buying from the US. So I think that is something that some people are saying may force the US to react a little bit. Well, uh, let's wait and watch. The markets and the US markets, the Dow had a remarkable 1,000 point recovery. Now it's well documented. All of you know about these 1,000 point recoveries. So I'm not going to say too much about it. What I will say though is that the futures are not necessarily looking very rosy. The US futures are trading marginally in the red, and which is why I think that will be a problem for Asian markets. The other thing is when one looks at key indicators, and actually I'll come to this in the trade setup for the Indian markets, but for the US markets, there is maybe, just maybe, one small indicator which suggests that maybe there could be a near-term plateauing out of the selling. VIX, very likely that will drop soon because it's hitting that mark from where it's consistently come off. The longer-term volatility spike is ahead, and that could be bearish for stocks. But for the very near term, it's kind of hit this line from where it typically tends to come back. It has at least come back all of the last 18 odd months. So let's wait and watch if that indeed were to happen or no. But as I said, the futures are still in the red, and Asia, that's why maybe ASX in particular, the Australian markets in particular, were trading at least in the open with a very sharp gash. Look at, I mean, this is of course the European markets mark, but if you look at the bottommost screen, that's Asia, and the ASX still has about a 2.27% cut. The others too trading marginally in the red. So looks like we'll have a tepid start. The US futures, of course, don't know how it's actually showing a mild bit of gains, but actually when I saw it in the morning, it was trading with a bit of a red. This is actually the US live market, if I'm not wrong. It's looking slightly wobbly. The futures, yes, of course, looking slightly wobbly as well. Let's bring up the SGX and show you what that is indicating. And then let's see if there is a bit of a respite or no. For now, about a 116-point drop on open. Let's watch if this gets exaggerated. Now, viewers, the point is, what's the trade setup for the day looking like? One can look at the last, actually, just very quickly, if I can pull up the MOV function and just show what happened in trade yesterday. I don't really need to show this to you because it is well known now that it was a very deep gash of red, with the market breadth looking very, very terrible, a bunch of stocks in the red. So that is very well documented. Just 20 stocks advancing to 481 declining. And while there were individual names like Sharda Cropchem, which we highlighted yesterday, or Bandhan or Cipla on that brokerage note, which did well, but Sharda and Bandhan Bank on the back of the results, a bunch of others really came off. What this does point towards, the viewers, and might be helpful for today's trade, is that if companies have come out with good numbers, they're actually doing well even in a bad market. So keep that at the back of your mind. Now, the trade setup for the day, a small bounce likely today. You never can rule it out, but we're still not in the extreme fear zone from where one can confidently say that it's a good time to create long. So I'll shy away from making that point. I do believe that from a global markets perspective, is that very, very unlikely there will be major reversals ahead of the FOMC address tomorrow. I think a lot of rumors floating around from on WhatsApp about how the Fed will hike rates tomorrow, etc. I think from whatever little I understand, I doubt that there can be a rate hike tomorrow. But yeah, the Fed commentary could be pertinent, could be bearish, could be guarded, and that could make or break the markets as well. But what I mean to say is that I somehow believe that there is very little chance that there will be a big market reversal ahead of this address tomorrow. Post that, sure, it could be. Let's wait and watch. Large banks like Axis and ICICI Bank could be first off the block in the case of a bounce. This, I believe, will certainly happen. That if indeed there is a bounce that happens, maybe today, maybe tomorrow, maybe the day after. Even though I believe that the reversal will not happen before tomorrow, but be that as it may, whenever the bounce does happen, um, Axis, ICICI, the performers, I think people should keep a keen eye out for them. And in the event of a bounce, those could be the ones that could really do well. I mean, we were doing the Twitter Spaces yesterday, and I think I'm forgetting who it was. Maybe it was Vikas Kimani or somebody else. But uh, the common talk was that on a normal day, ICICI Bank post its results would have actually shown a big bang jump up, and that didn't happen yesterday. So I think there was, of course, selling pressure, but I think this could get quickly absorbed if indeed the bounce back starts, and then ICICI Bank would be leading from the front. So keep those banks at the back of your mind. Most experts suggest some dipping of toes in the current fall, but not significant. Morgan Stanley, strategists on the US markets, of course, have said this, that we've been monitoring PMIs and earnings revisions, Brett, for signs that the slowdown is bottoming, but it is quite a bit further to go in our view, and equity markets are not yet priced for it. It's too early to get bullish. If it's too early to get bullish on the US markets, it's too early to get bullish on the Indian markets as well. Simple rule of thumb. FIs continue to sell 3,751 crores. DIs bought about 74 crores, but that's northwards of $2 billion, if I'm not wrong, or well over $2 billion really, in terms of primary markets, in terms of secondary market sales that the FIs have done in the month of January alone. So it's been continuation of the outflows that we've seen all through October, November, and December, and that isn't stopping. What about stocks to monitor? The stock of the day could well be Axis Bank. Yesterday, I spoke about how it could be ICICI Bank. Today, I won't be surprised if it's Axis Bank, and therefore, even if it doesn't bounce back, it could withstand the selling pressure maybe a bit admirably. Net profit numbers higher than YOY, NII much higher YOY. Asset quality falls on a QOQ basis. So is it as sparkling as ICICI? Maybe not, but I think the Credit Suisse note puts it up very well. It's an outperform rating from a target price of 960. They sum up the results well and the outlook well. So they say beat on growth and asset quality, but the operating expenditure drag the operating profits. So they adjust the FY22 to 24 EPS for a pickup in growth, but they believe a large portion of that could be offset by higher OPEX over the next 5 or 6 quarters based on their analysis and their interactions with Axis Bank. They continue to expect 15% ROEs in FY23 and 24. They value the bank at about 2 times 24-month forward book value, which is what gives them the price target of 960. Some others have a higher target price. I think CLSA says that it's the top pick, and the target price, I believe, is 1,080 or thereabouts. So horses for courses, but largely everybody bullish, and which is why I said that banks like ICICI and Axis could be first off the block. ICICI are much better than Axis, but Axis is pretty good too. So keep that at the back of your mind. From 704, if you're looking at the target price of 960 for Credit Suisse or 1,080 for CLSA or something else for Morgan Stanley, you know that the bank did okay. So this is why this is the stock of the day, really. Some other stocks in focus. I think the Morgan Stanley note on SBI cards summed up things well. Their target price is significantly higher than some of the others, by the way, 1,300. But they say that adjusted, the content is important here. They say that the adjusted PBT is below estimates over to higher provisions and expenses, but they're seeing improvement across metrics, spending, receivables, asset quality, with 20% ROE in second quarter and third quarter, which to them is quite remarkable. And they do see downside risks to their forecast, but they believe that the stock price is quote unquote interesting. Do a chart for SBI cards. Shriram Transport and Deepak Nitrite, two numbers which are weak. Shriram Transport, NII at 2,388 crores versus 2,148 crores, PAT down at 6.5% at 681 versus 728 crores. gross NPAs at 8.4 versus 7.82, net NPAs at 4.36 versus 4.18. The asset quality was bad, and that should hit Shriram Transport, likely hit Shriram Transport today. Though I think I probably saw one note, viewers, which was actually positive, if I'm not wrong. Just give me a second and I will tell you about it. I think Shriram Transport had a positive note to its numbers. So while optically the numbers do seem bad, yeah, CLSA has upgraded Shriram Transport to a buy. They said that AUM growth and net interest income was in line while PAT was a miss. But as the merger with they've cut the FY22 estimates by 11% due to higher credit costs, kept 23-24 stable, but they believe that from the pricing perspective, it is worth upgrading it to a buy. So do watch out for Shriram Transport. Deepak Nitrite, you have to say, was a disappointment. Revenues were up big time, 39%, which is quite stellar, really. The revenue growth at 1722 crores. So very strong performance there. You can't fault it for the top line, but EBITDA margins, big miss. You don't want a company which is transitioning to a specialty chemical company to have such volatility in margins. This time around, their fine and specialty chemicals division didn't do well. Now, all through the last few quarters, at least until 2021, if one thing didn't do well, the other thing did really well and helped Deepak on the upside. And now it is hurting Deepak on the downside. The spec chem companies don't lose margins so much. So that is the wobble. For now, maybe Deepak Nitrite continues to get not spec chem margins, not spec chem valuations, but normal commodity chem valuations. And if so, maybe the stock could see a bit of a corrective move today. Not, I didn't see any mention of the fundraise, so no details thereof, but let's wait and watch. But the numbers certainly disappointing on the margin side. The PAT was bolstered by, I think, prepayment of debt, so that was a good thing. Revenue growth impressive, but margins certainly bad, and therefore the stock should react negatively. Chennai Petro, revenues up 68%, PAT up 157%, EBITDA up 157%, a PAT of 229 crores versus a loss of 556 crores. So good numbers, could react positively. Let's wait and watch. Burger King, again, revenues up 72%, EBITDA up 116%, a loss at 15 crores versus 29 crores. So the loss has been narrowed down and therefore could be positive. Mixed results from some mid caps, so don't quite know which way they will react. Apollo Tricoat, Q3 revenue was down, but PAT was up 71%. Craftsman, revenue was up, but PAT was down 17%. Sudarshan Chemicals, revenues up 17%, PAT down 32%. Again, margins, I think a bit of an issue there. So this is the other one that could react. Good small cap results include an MBL, wherein the Q3 PAT was at 9 crores versus 0.07 crores. Again, base effect, but good numbers nevertheless. Arihin Superstructures, Q3 PAT up 125%. Oriental Hotels, PAT at 9.2 crores versus a 10.7 crore loss. So all of these may react positively. If they do, you at least know why. And then Jeffries on Bharti Airtel. Bharti yesterday came out with this news that they are going to do a preferential issue. Jeffries sums up well. So they said it's a surprise that there's no immediate need for capital for Bharti Airtel. That is one. They say that the issuance will usher in a strategic investor that boosts enterprise digital offerings will be seen positively. But if they use the money for any large acquisitions, it will be viewed negatively. The potential capital raise will continue to be a near-term overhang. So this is what they say you should watch out for. Maybe the fundraising keeps a bit of an overhang on this stock. Ramco Cements, I think the numbers were weak. So that is one thing. IndiaMart Intermesh, the numbers were weak. So that's the other pickle. HDFC AMC, the market share loss continued for them. So that was a bit of an issue as well. So watch out for these 2 or 3 names on the downside. And Axis, Chennai, Oriental, a couple of names which look interesting. All in all, viewers, mixed day of trade, but be super careful if you're playing for the bounce. There is this big Fed meet tomorrow, and a Fed, not a verdict, but commentary tomorrow, which could well determine what the near-term moves could be like. So keep that in mind as you trade. Trade safe, stay safe. Thanks so much for tuning in.